example video, we're going to look at review exercise 15-13, which is dealing with treasury stock. So it tells us that the Tulip Corporation uses the cost method to account for treasury stock transactions. That means we record our treasury stock at whatever we paid for it to acquire it. And they want us to know what journal entry would they make to record the reacquisition of 2,000 shares of its common stock at $12 per share. And then it says after the treasury stock transaction, they made the following entry when it reissued the treasury shares. And they asked us at what price per share were the treasury shares reissued. So two different pieces that we're going to look at. So first we need to do our journal entry to record the fact that we reacquired 2,000 shares of our own common stock and we paid $12 per share. So treasury stock is a contra equity account. It's conflicting against our equity because we are taking back shares of our stock out of the hands of shareholders. So under the cost method, we recorded at what we've paid for it. So $24,000 is what we paid to reacquire those shares of treasury stock. So that is what we would record it at. They told us in the problem that there was a journal entry that we got cash for $34,000, that the treasury stock had decreased by $24,000, and we had additional paid in capital from treasury stock for $10,000. They want us to figure out how much we reissued those shares for. Well, first things first, we see that our treasury stock account is decreasing by the full $24,000 that it went on our books for. So that means we're reissuing all 2,000 shares that we have. Also notice that our treasury stock comes off at whatever value we put it on our books for. So it went on at $24,000 or $12 per share, has to come off our books at the same amount. But they want us to figure out what we are reissuing those shares of stock for. So $34,000 is what we're getting in total, and we clearly sold all 2,000 shares of those treasury stocks that we reacquired. So that means we are reselling those shares of treasury stock for $17 per share. Notice I'm not recording a gain on the sale of treasury stock. We do not record gains and losses when we reissue shares of treasury stock. It simply goes into the additional paid in capital from treasury stock account. And that account can flip-flop from being an adjunct equity account, which it is in this case, meaning it's adding to the value of our equity, it has a credit, versus a contra equity account, which means that we would have sold it for less than what we had paid for those shares of treasury stock originally, and we would put it on our debit side.